Well guys, it's been a good run and I've enjoyed every moment with you, but tomorrow is the end. Tomorrow we have the Federal Reserve meeting, which is likely to cause some volatility. I'm being dramatic, but in this video, we're going to be going over some ideas, some setups, as well as what you need to know going into this major news event. Let's hop in. So here it is, guys. The FOMC meeting minutes comes out 2 p.m. February 22nd. That is going to be Wednesday. When you see this, it'll be your tomorrow, unless you watch it tomorrow, in which it'll be your today, which is all sorts of confusing. But we've got the Federal Reserve meeting minutes coming out, and let's go quickly a refresher for the newer traders out there why this matters. It's a detailed record of the FOMC's most recent meeting, providing in-depth insights into economic and financial conditions that influence their vote on where to set interest rates. And this is the part that you want to pay attention to. It's all about the interest rates. It's the forward-looking projections, the ideas, the votes, the concepts that the Federal Reserve is considering for future interest rate decisions. Now, I want to show you a cool chart. Give me 1 second. Okay, guys, so here it is. This is what we need to pay attention to. We're looking at two different charts on the screen: inflation rate forecast and interest rate forecast. And this is what it's all about. This is why the market cares. As we look into tomorrow's meeting minutes, we are going to get insight into the forward projections of interest rates here in the United States, which currently our projections are around 5.25% is the end result as early as Q2 of 2023. Okay, so this is kind of what we're looking at. Rate hikes to continue to push down this inflation. And as long as this sort of goes to scale, if we see inflation continue to come down, that's the Federal Reserve's plan for a quote unquote soft landing. Now, will they be able to achieve it? We'll see. But last week, we got some interesting information. I'll show you that right now. All right, so last week I mentioned we had some important information that I want to share with you. Inflation data. Let's recap what happened last week with CPI numbers here in the United States. So if I filter for USD, let me show you something. The most recent numbers did in fact come down. We hit 6.4%, which continues to be our decline from our June 2022 heights of inflation. So inflation is coming down, which is good, right? Wrong. Because here's the problem. Inflation is coming down, but the last week's report was hotter than expected, meaning that yes, it's coming down, but it's not coming down as fast as people were hoping for, which put a big sort of thorn in the side of the stock market last week. We'll take a look at that now. So here's a look at the stock market, and you can see that pretty much since last week, the stock market has tumbled as investors are creeped out a little bit, and rightfully so, with this hotter than expected inflation data pushing things down. It's caused us to take some trades inside of the Discord group, and let me show you the one that I'm in myself. The dollar against the Japanese yen. I'm long currently and floating a pretty good profit here going into the event with my stop loss locked in place. Now, again, last week we had some really red hot numbers here. We had hotter than expected inflation, higher than expected producer price index, PPI numbers, and retail sales were hotter than expected. All of this contributed, in my view, to a shifting bullish tone or hawkish tone potentially for the meeting tomorrow. Now, do I know that that's going to happen? No, but I have a bias to the upside on the dollar that I'm running with, and currently floating a nice profit to go with that. $2,400, $2,300 on this trade so far, and my stop loss is locked. I'm looking for a breakout here, and if you're watching the dollar pairs, then it's no surprise that I am, for the time being, riding this dollar bullish train. We'll take a quick look at DXY, which is the dollar's overall reaction to this recent stuff that I've been showing you. On this pullback, we have been bullish. You can see all the green on my screen. Usually when you see greens and Fibonacci retracements pointing towards the bullish side, it means I'm more interested on the long side than on the short side. And the dollar recently has looked pretty attractive to me. And going into tomorrow's Federal Reserve meeting, the reason I was all dramatic talking about this was because, well, the hawkish tone looks like it might put further pressure on the dollar and put some negative consequences on things like the NASDAQ, the stock market, which we could pivot and talk briefly about here. NAS 100 making a pullback. And to be fair, hey, there might be some bullish setups to take advantage of, but I'm being very cautious on the long side of the equities market at this time. As like I said, my favorite trade currently resides in the dollar, which we'll take a look at some setups here going into this week. Take a look at pound USD, which tagged just narrowly, actually just missed it, sorry, just narrowly missed this 61.8% retracement. We talked about this on my live stream today, a bearish bias here for me on the pound USD. Now, where am I getting this bearish bias? Well, it's from the chart, but it goes deeper than that. I want to show you some more data, which when I take trades and when I share ideas on YouTube, I do my best to share my ideas backed by data, not just gut feelings or opinions. So let me show you that now. Okay, so I'm going to go over to the Edge Finder and I'm just going to go down to major currency pairs and pull up pound USD. The pound USD gets a -8 in almost all categories. It is pointing towards a bearish rotation. And look at COT data. COT data pointing, where's the big money in all this? In terms of the dollar going into the Fed meeting, what is the, I'm sorry, not the Fed meeting, the meeting minutes. What is the Federal Reserve's position? Well, they're very bullish as of the latest filing, the US dollar, and they're very bearish the pound. On top of that, the retail sentiment here is very bearish on the pound, so that's a little bit of a red flag. That's the only thing going against us, right? The crowd is short as well. We'll come back to seasonality in just a moment. I want to show you some more charts on that. Trend to the downside, and in terms of economic data, pointing towards bullish on the USD pretty across the board. So we're getting a strong sell reading on the pound against the US dollar. So when I pull up this chart, like I said, pullbacks are in order in my view for sell side opportunity. That 61.8% looks really quite juicy, although I already have my USD JPY trade, so I probably won't be stacking any more USD related trades prior to the big event. In fact, my plan is just to continue to trail stops on my USD JPY trade going into the event. Now, we've got other markets that I want to talk about, but before we move on, let me show you that seasonality chart that I was talking about. So if I go over to seasonality and we pull up specifically the pound against the US dollar, take a look at this. The pound against the US dollar has a slight negative bias in the month of February, but as we go into March, you get some really dollar bullish factors pointing towards the pound being bearish in March, at least in the last 10 years on average. But it doesn't just end there. Let's keep looking around the room and I'll show you some more charts. Here's USD JPY, the trade that I'm in. The month of March is about negative, but February is bearish. Let's look at something like, for example, let's look at, let's see if we can find another dollar CAD maybe. We can try dollar CAD. Dollar CAD goes against us a little bit bullish for, I'm sorry, this is actually goes in our favor. I'm speaking incorrectly. We're talking about the dollar. Dollar looks bullish in March. Dollar looks bullish in February. So dollar CAD favored to the upside as we go into that month. And we can kind of keep going around the room. Gold might be an interesting one. So gold slightly positive in March. And again, we're just studying the seasonality. And back to my dollar yen, I think I spoke wrongly about this. March is a positive month for dollar yen, which we'll see if that plays out going into the coming weeks. So anyways, my point was showing you that is that a lot of factors here currently stack in favor of the dollar in my personal view, according to our data and according to the charts. But on top of that, I want to show you guys another chart, Euro USD, which completely fell apart, retesting levels of resistance here at 1.0708 and narrowly missed it for the retest before plummeting back down to the lows. And again, looking really strong for the dollar as we go into this meeting. Now, of course, I am not saying that within the news, we're going to see just a plummet further on the euro, or I'm not trying to make a gut call as to what I think is going to happen tomorrow's meeting minutes. However, the current sentiment in the markets is increasingly bullish for the US dollar in my view. You've got the stock market selling off, you've got seasonality in our favor, you've got inflation cooling, but not as fast as some investors were hoping for. A lot of analysts were sort of surprised by that hotter than expected number. For January. And so, yeah, you get a lot of factors here and it's all about risk to rewards, right? So like I said, that is what drove me to get long on dollar yen, which currently continues to push higher and is a trade that I shared inside of our Discord. Now I mentioned our Edge Finder, this software, if you don't already have access to it, you can get access down below in the description. If you would like access, there is a free version available and the premium one, which allows you to get full access to all of our data. If that's something you'd be interested in, check that out down below in the description. But seasonality can be something of a factor to pay attention to. But I also wanted to point towards, go back to this chart for a second, the Fed tracker. As we go into a major meeting minutes announcement, right, that those numbers and projections coming out tomorrow, it'll be very interesting to see how this potentially evolves going forward. But right now, like I said, there's a lot of increasing fear that hawkishness from the Fed might be stewing up again, as there's fear that inflation inflation measurements could suggest that inflation could spike up again or be a problem longer than expected and cause continued dollar bullishness, which especially in our case, shorting the yen, against the dollar, right? Long dollar, short yen, looks like it has a lot of upside as the yen continues to be quite weak, not just in the dollar camp, but also in things like some of the other currencies. CAD yen still doing pretty well, Euro yen doing quite well, NZD JPY doing well. And so that's currently my pick of the litter, if you will, is that dollar yen long side trade. Again, guys, don't forget to grab access to our data if you don't already have the free version. The link will be down below in the description. Thank you very much for watching this video. Hope this helps, and happy trading. Thanks for watching. It looks like you made it to the end of one of my videos. Thank you so much for supporting my content. It really means the world to me. And down below in the description, I put together some of my best resources for aspiring traders who are looking to improve. I've got some free downloads that could help you, some broker recommendations, and if you'd like to join our Discord or get access to some of our trading software, all of that will be linked down below in the description. Thanks for watching, and we'll see you next time.